Insurance companies often reward customers who go through a policy period without making claims. That reward is commonly called a no-claims discount or no-claim bonus. It can lower premiums, but it is not a gift. It is a pricing signal based on the insurer's view of risk. A protected discount may preserve the bonus after one claim, but the base premium can still change. A no-claims discount usually grows when the policyholder completes consecutive years without claims. In car insurance, one claim-free year may earn a small discount. Several claim-free years may earn a larger discount, depending on the insurer and local rules. A windshield claim may look minor, yet the rules decide whether it affects the discount. The discount exists because claim history helps insurers estimate future risk. A driver with no recent claims may be priced as less risky than a driver with repeated accidents. The discount encourages careful behavior and rewards customers who have not cost the insurer money. This matters because renewal price is checked before the decision becomes expensive to reverse. No-claims discounts are most familiar in auto insurance, but similar ideas can appear in other policies. The exact rules differ by country, insurer, and product. Some systems track the driver. Others track the policy. Some discounts can be transferred. Others cannot. A windshield repair can be cheap enough that claiming it may not always be worth the renewal risk. The discount can be lost or reduced after a claim. A small accident may cost more in future premium increases than the repair itself. That is why some drivers hesitate before filing minor claims. They compare the repair cost with the possible loss of discount. A claims certificate helps prove claim-free history when moving insurers. Imagine a driver has a repair bill of $400 and a deductible of $200. If filing the claim reduces a large no-claims discount for several years, paying privately may be cheaper. But this depends on policy rules, liability, reporting duties, and legal requirements. A claim-free year matters because the discount is earned through time without paid claims. Not every claim affects the discount the same way. A windshield claim, theft claim, natural disaster claim, or accident where another party is fully at fault may be treated differently depending on the insurer. Customers should not guess. They should ask how that claim type affects the discount. A person can notice this when fleet policy is checked before the decision becomes expensive to reverse. Some insurers offer no claims discount protection. This add-on may allow one or more claims without losing the discount. But protection is not magic. It may cost extra, may have limits, and may not stop the base premium from rising for other reasons. Protected discounts can cost extra, so the driver should compare the add-on price with the possible benefit. A protected discount and a protected premium are not the same thing. The discount percentage may remain, while the underlying premium increases because repair costs, location risk, inflation, or driver profile change. Customers often misunderstand this and feel misled at renewal. A renewal price can still rise because repair costs, inflation, or risk ratings changed across the insurer's portfolio. Proof of no claims may be needed when switching insurers. A new insurer may ask for a certificate or claims history from the previous company. Without proof, the customer may not receive the discount they expected. Protected discount wording should be read before assuming every future claim is harmless. No-claims discounts can influence behavior in unhealthy ways too. Someone may avoid reporting damage that should be reported under the policy or law. If another driver is involved, injuries appear later, or liability is unclear, hiding an incident can create bigger problems than losing a discount. A simple case is claims certificate is checked before the decision becomes expensive to reverse. The discount is also not the only factor in premium pricing. Age, vehicle type, address, mileage, coverage level, deductibles, driving record, credit factors where allowed, and market-wide claims costs can all matter. A customer can have a discount and still see a higher renewal price. A minor accident can create a bigger renewal effect than the driver expects. For families, the named driver rules matter. If a young driver is added to a parent's policy and has an accident, the no-claims history may be affected depending on how the policy is structured. The cheapest setup is not always the cleanest risk setup. A claim-free year is valuable, but it should not make someone avoid claiming a serious covered loss. Businesses with fleet policies need to track claims carefully. A few repeated claims can affect pricing for many vehicles. Training, maintenance, route planning, and driver monitoring can protect both safety and insurance cost. A careful driver can still face higher premiums if the insurer's overall claims costs rise. A common mistake is treating the discount as money already earned. It is better to treat it as a conditional benefit. It stays valuable only if the policy rules are followed and future claim history remains favorable. The pattern becomes concrete when minor accident is checked before the decision becomes expensive to reverse. Before deciding whether to claim, ask the insurer or broker what happens to the discount, whether the claim must be reported anyway, whether another party is involved, and how much the deductible will be. The cheapest choice is not always the safest contractual choice. A windshield claim may be treated differently depending on policy wording and local insurance practice. A no-claims discount is useful because it rewards lower claim activity, but it should not scare people away from valid claims when the loss is serious. Insurance exists for financial protection. The discount is a benefit. It should not become the reason a person stays exposed to a larger risk. A minor accident should be compared with the deductible, repair cost, and possible discount impact. The discount can also affect how people choose deductibles. A driver who wants to avoid small claims may choose a higher deductible to lower premiums, but that only works if they can afford the repair when something happens. The strategy should match cash reserves, not just optimism. Fleet policies may use different discount rules because many vehicles are rated together. When switching insurers, timing matters. Ask for proof of claim-free years before the old policy disappears from easy access. Keeping renewal notices and claims history records can make the new quote smoother and reduce arguments over discount eligibility. No claims history should be treated like a financial asset with conditions attached. It rewards lower claim activity, but it can be reduced by events, policy rules, or missing paperwork. Understanding those rules helps the customer decide calmly after a loss. The discount can also affect how people choose deductibles. A driver who wants to avoid small claims may choose a higher deductible to lower premiums, but that only works if they can afford the repair when something happens. The strategy should match cash reserves, not just optimism. The simple takeaway is to understand the rules before a loss happens. Know how your discount is earned, how it can be reduced, whether protection exists, and what proof you need when switching insurers. That knowledge turns a renewal surprise into a manageable decision.